All right, good afternoon, everybody. Should be live on YouTube. My name is Patrick Hawe. I'm an associated member of T3 Trading Group, which is a registered broker-dealer and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Please pause the video, take the time to read this disclosure. And position disclosure, nothing new, I think, since last time I was on YouTube. I did trim some tail today and still long pins as well. So I lightened up a little bit today in the rally. Where's this Netflix trading? Let's see. Up a little off highs, but nice move there. I mean, just the sentiment around this name was so bad after these past two reports. And I think one of the things that's really ticking it up, I just saw someone post that they lost, what was the exact number? They lost like 900,000 subscribers, and they were guiding that they were going to lose like 2 million. So I think they lost less subscribers than they had been guiding previously. I don't know. It was a decent report. It wasn't absolutely awful. So Netflix is up, so that's good there. All right, so let's talk about the market. So what happened today, what were we expecting, and what we can expect going forward. Okay, so market had a super strong bullish day, like very strong and bullish. And honestly, it was kind of a weird first half of the day, at least in my opinion. So to recap, first of all, what I titled the video today, I titled it "Bulls Breach the 50-Day into the Resistance Zone," and then I said after holding support yesterday. That was the main key to me. So recap of what happened yesterday. So yesterday we gap up into resistance. Resistance is a zone from 3,900 to 3,950 on the S&P, roughly 390 to roughly 393. It's really like 395 though. I'm pretty sure the futures tails are higher, but some of these tails from the futures, we opened up lower in the actual SPY on those days. So I guess let me bring up the futures chart as well, just so you guys can see what I am talking about. Where's my mouse? There it is. Okay, so here's today's candle. So breach the 50-day with a very solid breach, very solid close over it. First time hitting the 50-day since mid-April, so multiple months without hitting this, and we finally breached it today. And again, the key was after holding support. So, and then you can see here, wow, S&P actually almost really broke this resistance. Not quite. 3950 is like the real big level here, and we actually got pretty close to breaching that. So recap of yesterday, market gaps up into resistance. We spend the first half of the day doing like literally nothing. You almost thought the market was closed, which was bullish. It was pretty bullish action, right? Like you gap into resistance. One of two things, or I guess three things could happen. I mean, pretty much three things can only ever happen. You could go up, down, or sideways. But so gapping up into resistance, do you fail resistance? Do you just blast right through it? Or do you chop sideways? Least likely is you just blast right through it, especially after, like a really strong day, big gap up, another strong day, another gap up. That'd be a day 3 into resistance. It's not as probable to blast through resistance on like a day 3, day 4 up, just statistically speaking. But building in front of it, what we were doing the first half of yesterday, very bullish action. That means that, when you think about like what's actually going on when you're building into resistance, is you had, buyers held support, they bring it up to resistance, and then the sellers at resistance are not strong enough to totally reject it and have it go back down, because the buyers that bought it up to resistance are still buying, right? That's why it's holding up. And it's not going through because the seller's at resistance, so there's like an equal amount of buyers and sellers, and that's what creates like the flat choppiness. That's how I really like to think about markets and looking at charts, and I always like try to explain that to you guys, right? Like a bar, you see a green bar, and you don't want to see this green bar and think, oh, like green bar. You want to see a green bar and think, okay, for 5 minutes, like there was buying throughout the 5 minutes, buyers controlled that, right? That's all it is, just buyers and sellers. More buyers than sellers, you go up. More sellers than buyers, you go down. Equal amount, you chop sideways. So yesterday, first half of the day, we're building out in front of resistance, just chopping sideways. And honestly, if that Apple news didn't come out yesterday, we probably just would have flatlined all day for kind of like a small doji in front of resistance. But that Apple news comes out middle of the day yesterday, I think like 1:30 or so, totally tanks Apple, and that just hits the rest of the market down. So market rolls over in a pretty heavy way. This is pretty much selling all day, the second half of the day into the close, right? But what did we really try to emphasize at the end of yesterday was we failed resistance, but we held support. So was it a damaging candle? Yes. Was it a totally destructive candle? No. Why not? Because again, we didn't break support. We didn't close below support. In this case, 380, 3,800 is your first level, and then 3,750, roughly like 373 in SPY is like your real bigger level of support. But even just like a close below 380 would have been a little bit more worrisome. But it's really important to like note when you get like a negative event like you did yesterday. Again, you're selling all afternoon. Apple's getting hit very hard. Apple obviously controls a big part of the market. And that really tanked like pretty much everything yesterday. Just totally ruined it, right? But you held support. So as much as you might get scared of this action yesterday and you might be worried about what the future brings, it's the same concept as, trailing your stops and buying the ticket and taking the ride, right? Like, don't just sell because, you see like a red bar and you freak out or something like that. Like, if your out doesn't trigger, then your out doesn't trigger. So no need to worry. It's part of the game plan. So although yesterday's candle was damaging, it wasn't destructive. We did hold support. So really nothing too much to worry about. It was something to take notice of for sure. But nothing to like, totally freak out about and think that, it's all over and new lows coming right away. We held support yesterday. I think that was like the big key. So today, coming into today, we gap up big. Seems like we gap up or down big almost every night for almost no rhyme or reason to it. It can be a little annoying at times for sure. But so we gap up big this morning. And just have an insanely bullish day. Time correct off the open for the first like 20 minutes or so, and then you see this 5-minute ADMA catches up to, doesn't have to quite catch up to price, just catches up to lows, catches up to your base, catches up to your out, catches up to lows, and we're pretty much gone from there throughout the whole day. So why do I say today was kind of weird? So I think it was really the morning. The VIX action was kind of not confirming the rally, if you will. And I guess we should take a look at the actual... do I have resistance on NVIDIA? I'll answer that after I talk about the market. NVIDIA resistance would be 175, roughly 175 for NVIDIA. But so, yeah, let's take a look at the actual VIX real quick. So our actual VIX opens down a little bit, rallies back to highs, takes out the high. Market isn't selling off at this point. Market's still time correcting. And then VIX comes back down, but VIX never broke the opening low. This bar right here, you can see like this little gap. This is the first bar of the day right here. This opening low never broke all day today. And we also had a discrepancy a little bit between the VVIX and the VIX. But so this is the actual VIX here. low never broke, rallies back up, starts to trend down, but by this point, what time is this here? Like 10:30, 11 or so. By this point, it's like, okay, VIX hasn't even broken the opening low yet. It's 11, 11, 30, 12. This is just kind of like getting stuck sideways here. And while the VIX isn't puking out lower, the market is just grinding and grinding and grinding and going like grinding to almost, getting a little bit parabolic, stops for a bit, grinds up higher again, while the VIX isn't confirming the rally. So definitely a little bit confusing there. The VVIX, which I argue is more important to look at. People ask me this, like, if I could only pick one to watch, the VVIX, the VIX, UVXY, VXX, whatever, I would definitely say VVIX. And then today is a good example of why. So while the VIX is confusing you, this is what the VVIX is doing, little rally, and then this is what you would think the VIX would have looked like today, just puking lower, or maybe not puking, but just grinding lower, 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 flat lines a bit, and then a little bit of a rally into the close there. But so the morning action was kind of, it seemed like it wasn't really confirming it. I guess the VVIX did confirm it around, what is this, like a 10:30, 11 or so, when the VVIX made new lows here. But yeah, it seemed like it wasn't really being confirmed. So I think a couple of us actually took some cute shorts around this area. When, pretty much like up in this rally, we were calling out, okay, SPY hasn't touched the 5-minute ADMA all day today. I don't think I've ever seen a day where the 5-minute ADMA doesn't get touched. Like, it just always does. And that's one of the reasons why I really like, I don't want to say I like counter trend trades more, because that's not the case. That's definitely not the case at all. But for more like day, I think like I do for more day trading as opposed to swing trading. Counter trend swing trading is like, I mean, you're calling tops and bottoms when you're doing that. But counter trend day trading, these little like factoids like this, where, you're coming into noon, like half of the day already, and you haven't even touched the 5-minute ADMA yet. You're gonna touch the 5-minute ADMA at some point. Like, it's gonna happen, right? The question is, do you rally? And this is why you don't just short like full BP and extension, because you're going to touch it. But when SPY's at, coming into 390 and you're telling yourself you're gonna pull back and do it, does SPY get parabolic here and go to mid 391s, 392 and blow off first and then like really pull back? That's harder to predict. And that's why you have to watch your sizing for stuff like that. But so I think a couple of us took some cute shorts around this area, finally pulled back to the 5-minute ADMA. This ended up being a 15-minute bull flag here. So you can see here this morning, just super, super strong off the open. And then we go sideways for like a decent hour or so. Then finally that 15-minute ADMA catches up, and that just pushes us higher. And that was just really a guide all day. Market definitely very, very healthy. I mean, I'm looking at like my watch list right now. I don't think I see any red names there. Breath was very, very strong today. So SPY up almost 3%. Do you have a sizing chart? What do you mean by that? Share size? Well, like for what? For the size of the positions that we're in, you mean? Or like when I'm talking to you about entering trades and stuff? I mean, it's a size calculator. No, I just do that type of math in my head, really. Compliance doesn't allow us to tell you guys like exact sizing or exact price. I don't know why, it's just a rule. But so your question, do I have a sizing chart? No, I mean, it's more, I feel like we usually do it more in a dollar risk sense, and then you kind of like figure out your sizing from that. So like, I'm not saying I want to risk, I don't know, like 500 shares or something like that. I'm saying, okay, like I want to make $100. I'm willing to, and it depends what type of trade you're in, but like I'm willing to be down, 200 at the most to, I'm trying to make 100, but if it keeps going against me, then I'm willing to be down up to whatever, 500 to make 1,000, something like that. I'm happy to explain that a little bit more a little later. Just feel free to re-ask that question, Dan. But anyway, so breadth very, very, very strong today. Just like impressively strong. I was about to say that Fang kind of led us, but I guess that's not really the case. Q's up 3.5%, IWM up 3.74%. The Dow was the worst today. The two names that really stuck out to me from this morning were Google and AMD. So Google was the first one, I think. Let me check this time. This was 9:55, and AMD was same time. So Google and AMD were the two that stuck out to me today for early strength because they both took out their highs, right? So market's gapping up big. We're thinking, market's gapping up big after the negative Apple news yesterday and after we sold off so hard yesterday. So we're thinking, okay, it's a pretty big gap up. Do we price correct and just, sellers take control and take us right back down? Oh, and Apple was kind of weak this morning too, actually. I remember this too. Yeah, it was kind of like there were a couple things here and there. I'm like starting to think of it now as I'm like remembering what this morning was like. But like, for example, this Apple was pretty weak pre-market. This opened and price corrected right away. It's hard to predict like such a huge day for the market when the morning was kind of giving us a few mixed signals here. But eventually things caught up. Things went through their high and the trend was intact and the trend stayed there all day. So the two names that stuck out to me were Google and AMD. Google went split yesterday for the first time. So today was day 2 for it. But you can see opens, and this is that V bottom that I talk about, that I really like this on the 5-minute. I see it. I've seen it with consistency enough for me to talk about it to you guys. Where, again, it's not like a perfect V, but the idea is, you open, usually it's like in a gap up, you come down to the moving averages or whatever, and then you pretty much just go right back up. It doesn't have to be like bar for bar or anything like that. But, you open, you price correct, and then you don't even like retrace 50% of this candle, come back down, retest the low. Like, that's not the V bottom I'm talking about. I'm talking about down and then right back up. So Google and AMD were the first ones that were at least on my radar that took out this opening high. So it takes out the opening high, you get a little momentum, you retest that, and then you're off for the day. AMD, more of a time correction than a price correction. Open, shakes around for the same amount of time as Google, really, and then takes out the high, you get some momentum, you get a retest of that, and you're off for the day. And then it was just like a spree of buying, like all day. Like I can't even, like my brain hurts when I think about the different names that were bought, and just Amazon calls and Google calls all day and AMD calls all day and Nvidia calls all day. Lots of SPY calls. There's some big SPY lottos this morning. There's a really big one this morning, actually. I'd love to go back and find it, but it was a pretty big order for SPY calls that were lottos as well. But just a totally it was just totally bullish day in like everywhere. I get even like energy ended up doing pretty well. Oil ended up rallying a little bit. What about like Oxy ended up breaking up a bit. Financials did really well. Financials were, if anything, leading early on when like Apple was fairly weak this morning. You had Goldman, which was helping the Dow. Goldman just pretty much straight up, took out yesterday's high. And then the trend, decreased a bit, but very, very strong day there for Goldman. Great day for financials in general. Honestly, just a great day for the market as a whole. if anyone has anything out there that like was significantly weak, and I don't mean just like one stock. I mean like a sector, or like anything like that. I'd be curious. But yeah, just a very, very overall bullish day for the market as a whole. And again, that happened after we had a bad day that held support. That is like the absolute key. I can't emphasize that enough. We emphasized it a lot yesterday. Support did not break yesterday. Yesterday was a gap up that price corrected to the moving averages, partially due to that bad news to Apple. But support did not break yesterday. Support held. And then we had a gap and kind of like a gap and go today. So that's the market in general. What's Netflix doing still? Netflix is still up a little bit. But Netflix, another example here of kind of just maybe bad news isn't so bad anymore. With MU was really like the star of the show for that and really kicked things off for this earnings season already, right? MU just like terrible guidance. Some of the worst guidance I've ever seen, I feel like, from MU. And they bought it up, and then the next day they bought it up even more, and they've still been buying it up ever since. To the point where this theme in this earnings season is almost getting too obvious too early, and that might not work in the second half. But for now, it seems like the general theme is bad news really isn't so bad anymore, and that's a sign of sellers' exhaustion, right? Like if you have holders and they are waiting for a report to determine whether they want to keep the position, sell the position, add more to the position, they're waiting for the report, right? The report comes out. If the report's bad enough, they're going to sell their position. Well, what happens when the report is bad and no one is selling? Because there's no one left to sell. To put it simply anyway, it's obviously not that simple. But that's the basic idea of it, is just seller's exhaustion, right? Which happens in markets. There's two ways really that markets bottom. They either capitulate, which we've seen some like smaller capitulations this year, or sellers just get exhausted and they just base out and eventually just like round and break up. And we're certainly not calling for like an absolute bottom. I am definitely not ready to do that based on the macro environment, but there are definitely starting to be signs that sellers have been a bit exhausted, at least in the short term. So that's the market today. Extremely bullish day. I'm still like almost a little dumbfounded by it. Just like was watching the action for the most part, especially in the second half of the day. I wasn't really doing too much because you could recognize just how strong everything was and how grindy it was. And I've definitely been that guy in the past where I'm like, we're up too much today, and you just kind of like fight the short all day and you end up getting steamrolled over. So I was definitely less active in the second half of the day. But even like in the second half, I remember like someone asked about Google 113, and I'm not good at chasing momentum like this because I just feel like I'm just so late, and I'm just like, I should have been long Google from way back here when it took out the opening high, so I can't bring myself to buy it here. But that doesn't mean I'm going to short it here. And even whoever called this, I hope you did making a little bit of money off this, because even like this Google play at the end of the day, through this 113 ended up working. Just everything got bought up all day today, really like into the close. And now you got Netflix up after hours, which is going to help, or at least it should help market sentiment even more. So yeah, just very, very, very impressive day for the market in general. Let me look back and see if I'm missing anything else to really talk about. I feel like our list this morning was kind of random. Yeah, I don't really see anything off this list possible. AMD we had on the list, which was obviously fantastic. Again, I just went over that play there, taking out the opening high there. Some other random names. This 9 was on the list. I don't think this WeWork broke 550. No, it didn't. Dollar Tree, ANET was decent for sure. Actually, It was decent, but this looks hard to trade, and this looks like a thin name. I don't think I've ever even traded that, honestly. And then this DLTR wasn't great today, but that's because it was such a risk-on day, and this name, if anything, is more of like a risk-off recessionary type play, like kind of like a safety recession play. So it actually does make sense. This still looks good, by the way. This still looks really good for this like roughly 171, maybe 171.50 for confirmation, but 171. This still looks really good, but it does make sense that a recession safety name wouldn't wouldn't be quite as good on a day where it was just fully risk on and your IWM is up 3.5%, Qs are up 3.5%. It was just totally risk on today. So that makes sense that you would have a day like this for a recession safety type play, as opposed to you could have like a down day for the markets because of recession fears, and you could have this name trading up 1% on those recession fears. So it makes sense that Dollar Tree wasn't that great. But in general, it was just, again, it was a spree of buying, Google calls, NVIDIA calls all day throughout the session today. Very, very impressive. So, yeah, that's that list. So what can we expect going forward? So going forward, we'll definitely need to see how we gap, obviously. Short-term sentiment is going to be interesting after today to me. It's been someone pointed that out this morning too. It's been very whippy. After these 2 days, it didn't get overcooked, but it was definitely in the upper half of the range there, including this gap up. Then this yesterday, not destruction, but damaging candle from the SPY, from the S&P, whipped that back down, and now we gapped up decently and had this candle today. I wouldn't be surprised if short-term sentiment is cooked to the upside after today. So that's going to be something to pay attention to as we get into, we're really like at it pretty much here, the upper level of this resistance. Again, I think like 395, more of like a better trigger for that. But so going forward after today, going forward for tomorrow, today's one of those days where, as like a newer trader, or maybe like less experienced or whatever, you see a day like today and it gets you excited, and so you come in and want to buy like a lot tomorrow. That is definitely not what you want to do. It's rarer to have a day two just like today without some type of pause there. And I remember like being like that too, like after a day like today where, it's worse on a trading floor, especially when you're newer, when like everyone around you is just crushing it on a day like today, and you're a newer trader, so maybe you're not swinging anything, and if you're not swinging anything and you're being too tight on your stops, you might be kind of like chopping yourself up in the morning a little bit, and then by the middle of the day you're super frustrated. So again, every day is a new day, right? Like whatever happened yesterday, whatever, forget it, don't forget about it, but every day is a new day. Approach every day like it is a new day, new opportunities. Anything can happen in a given day. And it's true, anything can happen, especially in this market. Would it be surprising to anyone here for after today for us to gap down and, sell all day tomorrow? Sure, it would definitely be a little surprising, but like it wouldn't be that shocking. And I'm definitely not calling for that. We definitely should see some follow through. But again, just after this gap up and after this very, very strong day today, I'm curious to see where short-term sentiment's going to be. I have a feeling it's going to be overcooked. So we probably need to pause a bit into this 395 level. After this 395 level, we do have this gap. Yes, I know we have the gap. Everyone can see this gap. Anyone who can type a SPY chart up can see this gap. I'm not really focused on this gap. And also keep in mind that this gap was caused by CPI that came out at 8:30 this morning. So this is a gap in SPY that isn't a gap in the futures chart. And futures gaps are way more important to me at least. So this 395, definitely a big level. Probably due for a bit of a pause. let's look at like some of these daily charts. Like Nvidia, great. Amazon, great. AMD, great. But you probably don't want... You shouldn't expect like another huge day like today right away tomorrow. It's a better setup for that not to happen. It's a better setup for it to give like an inside day, or a doji day, or like maybe even 2 doji days. Maybe build out, maybe today's is a flagpole, right? And then we build out like a 2-day flag or something, and then have like another leg higher. That could work. But so tomorrow might be a bit tricky, and that usually happens after a day like today, where everyone gets like really giddy and kind of excited to buy, and then you'll have like a day like today where it's huge. Tomorrow everyone wants to buy, everyone tries to buy. It's a choppy doji day. Everyone gets chopped up and loses money and gets stopped out, and then like the next day, then we can resume upward. So bigger picture, we're definitely starting to look better here. We're butting our heads up against resistance after holding support multiple times in the lower end of the range. We're back above these moving averages. These moving averages are curled up. Technically speaking, this looks like we should get more follow through to possibly, 400 is such a big level, but possibly like 405 to 410. Technically speaking, I think this looks like we should get more follow through in the bigger picture. In the smaller picture for tomorrow, I wouldn't be too like giddy just like jumping the gun tomorrow after a day like today, especially if we gap up tomorrow. If we gap up tomorrow again, we're gonna start to be extended from our moving averages again. So we'll see how we gap. We have Tesla earnings tomorrow, Snapchat on Thursday, and then a couple more early next week. I think Microsoft is at the beginning of the week as well. I think Google is at the beginning of the week. And then we have the Fed next Wednesday, right? Which I think the Wall Street Journal over the weekend said they were going to do 75. Wall Street Journal tends to be pretty accurate with their calls for that. So market's probably expecting 75. We'll see what they do Wednesday. We'll see what their language is for the press conference, everything like that. And then Apple and Amazon earnings on Thursday, with Apple being very big. That reaction is going to be very interesting for sure, the reaction to the Apple earnings. I'm sure they'll be decent. I'm sure they won't blow it out of the water. I'm sure they won't be too bad either. But the reaction will definitely be interesting. And this thing's already having a pre-earnings run, right? It's 130 to 150 in a couple weeks or so, even 135 to 150 in like 2 weeks. So that reaction will be interesting. Yeah, I think that's all I really got. Very, very impressive day in general. I hope I'm not forgetting anything. I don't think I am, but just a very impressive day. It feels like sellers have been exhausted from this market for a little bit now, so we probably should get some more follow through. But again, it was a big day today. Don't expect another big day tomorrow. Could it happen? Sure, but don't expect a big day tomorrow. I expect some type of chop and consolidation around this 395 level, and then if we can build this 395 level kind of like we built for, what is this, like 415 up here, that will set us up for like a real break higher. So yeah, I think that's all I really have to talk about. Just an extremely impressive. So yeah, I think that's all I really got. So happy to take any questions, comments, concerns, complaints that anyone has. So yeah, I'll scroll back up. Yeah, Ackman took a 30% loss, and the portfolio loss from that was only like 0.1% or something like that. It was impressive to see him lose 100 points in Netflix. And again, I feel like I compared it to like a $5,000 trader losing like $25 or $50 or something like that. But yeah, I doubt he is kicking himself now. This is still not fully recovered. That's for sure for Netflix. Okay, so yeah, resistance on NVIDIA. Let me take a better look at that for you. So I think I said 175. This is 173. I mean, you got this pivot at 173. What's this open? 176. This 176 looks to be like a decent level, and I'm saying that one from this open, and then it looks like a bit of an inflection point from back here as well. You can see how we like closed around it, failed at it, failed at it, failed at it, failed at it. A lot of failures back here at 176. So 173 for this pivot, TH, 176, and then 180 is like is a really big level for sure. But 173 is a pivot, 176 is resistance, and then 180 is your resistance after 176 for NVIDIA. Great day there today. Great day everywhere. But yeah, fantastic day for NVIDIA. And that was on top of, I forgot to talk about the chip news that came out too, that it was on top of McConnell coming out and saying that he's not going to vote for the CHIPS Act now, which smacked NVIDIA down, or smacked Intel down. I think some of you guys caught a short off this. We had that news like decently early, but that was only good for one bar. And then just the market was so strong, the like whatever flows were happening today was just so strong that it was just good for one bar, and that's it. And then Intel bounced back up nicely. This barely even hit NVIDIA, barely hit AMD, really only rocked Intel there, but Intel bounced back nicely from that. So that's like almost even adds to the impressiveness of the strength of today, is to have that come out and the market not really care about it, which you would think it should. And maybe today, maybe just like yesterday was a one-day phenomenon of selling, maybe today was just a one-day phenomenon of buying. So yeah. But yeah, so anyway, for NVIDIA, 176 and then 180. Are Qs hitting 300? They got close. Qs are above their range. Next big level for Qs really 305, which 305, I mean, that's back to this consolidation, which is like 405, 410 for SPY. Qs getting closer to that. It's impressive. It's very impressive. So yeah, Dan, your sizing chart question, I'm still a little confused on the question, to be honest. If you're asking like what our sizes and things, we can't tell you. That's why like Redler does his like tier system, because he's also a registered prop trader with T3, right? So he has to follow the same compliance rules. So that's why Redler does like the tier 1, 2, 3, 4, whatever type of thing that he does. So maybe we'll start to try to be better about saying something like that. I try to more just say like conviction, which this has been I haven't had high conviction in like anything in a while. But I mean, you've seen what this market's been doing for months now. I don't think it's responsible to have super high conviction in anything really market related yet anyway, because we never really capitulated, right? Which is annoying. And it would not be surprised. Again, everyone's looking for capitulation. Capitulation doesn't happen. You just get months and months and months of chop and blah, blah, blah. And eventually those sellers exhaust, and then you wedge and break out, which is starting to happen a bit here. Could that fail again and we have another leg down later on in the summer? For sure. Could definitely happen. But it seems like this bottom, for now, is happening in a way more of sellers' exhaustion than of capitulation. So yeah, but anyway, Dan, to your point, we'll try to be better about maybe like saying tier 1, 2, 3 or something like that. Just trying to communicate sizing a little better. But I really haven't been doing big size and much of anything besides very tiny day trades here and there. For the most part, the swings have been pretty small in size, which has allowed me to stay in them in the downturns. So I don't know if that helps at all. I hope that helps, and if it doesn't, then feel free to make suggestions for how we could help further, because definitely happy to help any way we can. But we'll try to be better about being more clear with sizing and conviction and stuff like that. But this isn't a great market to be taking too much size and having too much conviction, because it's just such a long process that by the time all that, like if you're too early too much, or you chop yourself up too much because you're trying to take too much size and be too tight, then by the time this is all said and done, whether it's starting to be said and done now, or whether it's going to be said and done 6 months from now, and Q's, have like another leg lower later on this summer, you might be out of, gunpowder. You might be out of bullets by the time the real bottom's in, if you're just constantly trying to have too much conviction and take too much size. There definitely is a time for that, but it's just it's not yet. It might be coming soon, but it's been harder for me to really I haven't confidently had conviction in a while. Like even this pins, like I have high conviction in pins, but I don't have the timing conviction. Like I love the name, I love the fundamentals, I love everything about it, but I know that if I like it at 20, I'm going to like it even more at 15, right? So I'm not going to be full sized here in case the market, in case we do get that capitulation and I get the opportunity to buy more at 15. I would love to buy more at 15, but if I'm too heavy here now and I'm seeing what my P&L looks like when pins is at 15, you're going to be like sweating and pulling your hair out, and when you should be happy and kind of, really starting to buy and load the boat there. So it's like a mix of, it's just harder to time this market right, because when in down markets, everything is so much more correlated. So even though Pinterest, I think, is great value here, it's even better value at 15, and it's even better value at 10, right? We've seen these stocks go down like 90% over the past year or so. So yeah, I hope that helps a little bit, Dan. But in this market, better to stay small, better to stay nimble, and when it's all said and done, and what I mean by that, when it's all said and done, is like when we finally get back to like really uptrending, whether that's might happen sooner than we think, or whether that doesn't happen until we get like a real Fed pause and a real Fed pivot. Which in my note today, actually, McElliott mentioned how even when we do get the next Fed pivot, we still might get stuck in a sideways market for like a year or two, honestly, which I could see that happening. Just because what ignited this market, all that money, it's not going to, like all that money's not going to just come right back when the Fed pauses or anything like that. Now I'm just like starting to talk a little bit too much. But yeah. Shoe size. You guys talking about shoe size? Got bear trapped today on Meta. Is it worth paying attention? Sorry you got bear trapped. You got bear trapped. I mean, you gotta have your outs. And if you don't have an out, then you always have to have an out. Let me say that first. Your out doesn't always have to be the top of the last 5-minute bar or the bottom of the last 5-minute bar or something like that. But if you're shorting like a name like this without an out, I mean, you better be giving this thing to like 185. You better have like room on this thing, because otherwise, that could happen today. So I'm sorry you got bear trapped. Who's up? But I'm not sure where you entered or anything like that. But once this took out the high over here, it's hard to fight that. It's hard to fight that once that takes out a new high. I know you had a question after that, so let me read the question. I need to stop this VTF from scrolling to the bottom. I keep losing my place. Hang on. Is it worth paying attention to support and resistance levels on the 15-minute, or should I focus on higher time frames like hourly and daily? Definitely daily. All my support, all my levels come from the daily chart. But oftentimes you can see it on a 5 or 15-minute chart. And all you got to do is just like go to your 5-minute and scroll back. So if you're looking at like I don't know, this is just SPY on the 5-minute chart. If you're looking at today and yesterday for SPY, you might be seeing, 387 is support for SPY. Because it bounced off 387 a couple times yesterday. You need more than one day of data. So if you really scroll out and look at this, then I can take a look and say, okay, 384, and I remember this 384 level, holding, loses it, but takes it back. Like, it's a big inflection point. It's not like, and the market's not perfect. Support and resistance is never going to be perfect, right? I always say that. You're never, maybe not never, but you're rarely going to hold support to the penny and resistance to the penny. They're inflection points, right? So like this 384 is a big reflection point from back here that you could have identified. So now when SPY is coming back up to 384 here, well, look at this. It, bumps its head up against 384 and then chops 384 all day. And then the next day we gap up, come back down, bounce off 384 level, lose that 384 level. But really from the daily. So I'm not saying like you can't see it on a 5 or 15-minute chart, because you can. I just showed you how. But daily is important. It's usually from just multiple candles. And again, I always emphasize as well, a high and a low is just as important to me as an open and a close. All four are important to me. I don't only look at highs and lows. I look at closes as well. So that's why, like, what is this, SPY? So, like, SPY 390, you might miss this 390 if you're not looking at the open from this day. If you're looking at the tail, you might miss that 390 and think it needs to get to 393. But 393 and 390 are both levels. One's a high and one's an open. It was the open of a very big, very damaging day here. So yeah, from your day, I would take it from your daily charts. If you're looking at a 5 or 15, don't look at 1 or 2 days. Look at multiple days and study those. Usually it's either a whole dollar, like a 50-cent increment. For the most part, it's usually either a whole dollar or a 50-cent increment, and just study those inflection points. But yeah, your daily chart, and again, your high, your low, your open, and your close are all important in my opinion. Hope that helps. Josh helping Dan as well. Amount of money willing to lose. If I buy the space risk. Yep. Like today, who's up? Same guy. Like today, I went short on Meta versus yesterday's top, especially after the false breakout. My target was honestly 169. Okay. Wait, let me reread that. Like today on Meta, I went short versus yesterday's top, especially after the false breakout. Well, so if you got squeezed, so I don't know if you're trying to say like you got stopped out here and then you missed this pull or something like that, but it's good. I hope you got stopped out over yesterday's high, because that's the right thing to do. I don't know where your entry was, so I would like more information on your trade, but I would want to know what your entry price was because hopefully you were at least risking less than your reward potential. A cute short like that where you're risking $1 to make $1 on something like this, just probably don't even bother. Not saying that it can't work, but you don't want to risk one to make one. You want to risk one to make ideally 3 or more for the most part. Ideally 2 or more, but the more the better, obviously. So hopefully you stopped yourself out and you didn't just let this ride against you all day. If you did, hopefully you learn your lesson, and I'm sure it was an expensive lesson, and I'm sorry about that. I've had many, 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 many expensive lessons that I've learned. But yeah, I wouldn't. Was yesterday a false breakout? I don't think you could really call it that either. Well, so this was. It's too bad you're not in the VTF yet either. This was a great point that Derek made this morning during the morning meeting. Was like a lot of these candles from yesterday had these topping tails to it, but it was caused by that Apple news that really rolled the market over. And that's why we were saying like yesterday, if that Apple news didn't come out, SPY probably would have just flatlined this gap all day today. Maybe not, but probably would have just flatlined all day. And that tail shouldn't have happened without Apple. So it was kind of like a one-day thing. And really, this level on Meta 170, 170 a level, then 172.50 looks like a level just from like these highs over here. Just rough eyeballing it. That's all. And again, use your whole dollars or your 50 cents for your support. You don't want to say resistance on Meta is 172 dot, whatever 17, and try to short at 172.16 and have your out at, don't be so exact to the penny like that. It's usually just whole dollars, and you get little chops here and there because the market's not a perfect place. But so sure, I see what you mean with this tail. But one, this gapped up a lot, so that should already have you be worried a little bit, I think. And then once this takes out the high, that's it. You're wrong. You take your loss and you move on. So I'm sorry if you lost money on Meta there, but again, I think the main takeaway that you should take from today is just respect your stops and respect your outs and make sure that your outs are in a good spot. Yesterday, you're going for a short in Meta based off the candle from yesterday, which had an upper tail. Once that upper tail breaks, that's it. You don't want to fight that. There is no way that Meta should be breaking that. That was a pretty big tail for it, right? This rollover from 172 and change to 167. That was a pretty big tail. There is no way that Meta should be able to take that tail out if it's going to have a real move down. And that's how you want to think about things, right? Like, there's no, like, this should happen. If this happens, there's no way that this should happen if this happens. And if that thing that there's no way that should happen happens, then I'm totally wrong. And if anything, you can look for the other side of the trade, which is one of the hardest parts about being a trader and being able to flip on a dime just based off like information like right there like that. But that's what makes a good trader into a great trader. I was thinking about that yesterday with the Apple news and how yesterday was such like a boring day and you're not really doing anything and whatever, but then the Apple news comes out, that makes it a not boring day anymore. It was big news, and even if you weren't sure if it was big news or not, just look at this first bar for Apple. It clearly was big news. So you don't want to see that and say, well, it's a boring day. It's supposed to be a boring day, so I'm going to fight my bias of it being a boring day and keep thinking it's a boring day. When in reality, you see your information, you take your information, and you go with it, and you flip, and you don't have a bias, and that's how you try to short resistance, and then it blows through resistance, and instead of just stopping yourself out, you're able to flip long and make money on the other side as well. Much easier said than done, obviously, but so yeah, that's my spiel about Meta for you. I hope that kind of helps a little bit, but I don't hate your idea, I don't hate your trade, but your out definitely should have been yesterday's high, and hopefully you did stop yourself out for that. Scrolling down. Yeah, Q started weak. Apple started weak. IWM a great leader today for sure. Listen to yourself, Josh. You're a smart guy, and you got a good gut for this stuff too. Don't fight your gut. Listen to your gut. Everyone should do that, myself included. More usually, I feel like usually we have, especially as traders, you have a good gut, and then you want to be like a wise guy or like a smart guy or a smart girl, and you start to like overthink your gut instinct, and usually your gut ends up being right. Usually. Could see a massive bear market rally, Derek's saying. I agree. I mean, technically it's starting already, but yeah, more so to, again, like if this range breaks, then we're looking at 400, 405 and beyond. And beyond. I mean, a real massive bear market rally would be like to the 200 day and then like another failure or something like that. But take it day by day, and we got a huge week coming up next week with the Fed and Apple earnings and everything like that. So next week's going to be huge. Don't buy back startup again on Friday. Maybe in buying in. It depends on the company, Paul. It depends what name. So if a name's about to report earnings, they're in like the blackout window, right? So they can't buy back, and then they can start buying back again. Whatever a certain amount of time after the report. So it depends on the company. I'm pretty sure, Paul. It's not a general rule. Do I feel guilty for bailing on Derek the rest of the week? No. Should you crush some more afternoon meetings when I come back? Yeah, I probably should. That was an easy question. I'm sure Derek will take care of you guys just fine. 410 is a massive level for sure. Pan W, pretty much an inside day, missed by 62 cents and up. Pan W, yeah, inside day. I don't want to say I've never traded this name because that's definitely not true, but this is not an easy name to trade. Definitely in the big picture a better hold. This 500 is huge. 520 is pretty big. 525. You could look at this above 520, I think. Definitely not an easy name to trade. That's like the type of name where you gotta risk 5 points to make 15, 20 points or something like that, which isn't impossible. I mean, you could do that, but you just gotta size that right. You can't be trading a name like this when you're used to risking 25 cents. Again, this is more of a name where you risk multiple points to make multiple more points. GLD on the monthly chart says 2 pivot / demands areas at 157. Any play there? GLD is such a mess. It's so hard. You're saying monthly 157. Yeah. Okay, well, I've been talking about this for a while. If you really want to talk about like big picture stuff, this GLD, which this is actually interesting. This GLD has this giant cup and handle. I remember talking about this like a few months ago. That is possibly failing here. Possibly failing below this 160. Which from a failed move comes a fast move, right? Let me look at this weekly real quick. What level did you say? 157? 157 area. Yeah, I see that. I think it's more just 160 is what you should use. Especially because of this possible cup and handle failing here, where this could possibly have, what you got, like roughly 175 to 160 range. That's 15 points. So 160 minus 15, 145. That gives you a measured move to 145. If this, did I say that right? 145. If this is actually failing, it might not be. but I probably wouldn't use 157. I think I would just use 160. And even these 157s, this broke 160, and you could have bought it back through 160. You get this move here, breaks 160, get out of the way, trades back up through 160. You could have been long, and that would have paid you nicely. So I think I would just keep paying attention to 160, maybe even these tails over here. But I don't think I would try to buy this at 157. I think I would wait for it to trade back up through 160. And if it doesn't happen, it doesn't happen, and it keeps going down. And if it does happen, then you might get a move back to like 165 or so. Gold is so hard. It's so hard. But this is week 4 down. You're extended on the weekly here. So I mean, maybe you can look at those levels, but I think more responsibly would just be to buy it back up through 160. Hope that makes sense. But I think that's the way I would play it anyway, just because I know it's just so hard. Gold is so hard. Congressional chip deal in the works. It's supposed to be. McConnell's trying to make Pelosi lose money or whatever jokes you want to make about that. But yeah, it's supposed to be. We'll see if they can get it done or not. You know how good our Congress is at getting stuff done, so we'll see. Nice review and great reminder. Tapering expectations. Yeah, for sure, Nick. Glad to help. What about the TLT today? Should it be noted? Another weird thing from this morning that ended up being fine, but this was another thing this morning where I remember like markets just kind of hanging out, kind of grinding higher. VIX isn't breaking down. VIX is holding the low, and then this TLT just like dives out of nowhere, and we're looking at it diving, and then it just recovers back up and then goes sideways. So let's look at the actual daily candle. I don't think there's really anything to note here. If anything, the thing to note would be the flatness of this, aka the flatness of rates, which is what you want to see. Rates have been going up, but they're not historically screaming high or anything. Which, I mean, you hear all these people, I'm sure some of you guys experienced it too, with like mortgage rates back when, whatever, you're paying 17, 18, over 20% for your mortgage, and then you're getting your mortgage, you're refinancing it down to 8%. You're thinking you're getting such a good deal on 8%, which, it's not a bad deal. Rates aren't like super, super high, but the thing that really shakes things up is the speed at which, when they move really fast, whether it's up or down. So I don't think there's anything really to note of TLT here. I mean, this was just this might have just been due to the illiquidity of the market. But I think if anything, what you really should know from the TLT here is how it's been finally going sideways for a bit. Kind of breaking this trend line in a way, very sloppy. But that's good. Rates have stabilized, and that should help the market. You don't want extreme volatility in the bond market, aka the market that is much bigger than the stock market. You don't want extreme volatility there. So I think if anything, going forward, this is wedging out a bit. It's nice to see this flat, and you could pay attention to which way this wedge breaks, whether it's roughly 115.50 on the upside or 113.50 on the downside. But nice to see rates stable for now, as the market just prices everything in. We have the Fed next Wednesday as well, so we'll have to see what the Fed says too. Whether they're thinking about pausing, or they're thinking that inflation, might be starting to finally cool off, so they could finally start to think about pausing, or whether they're still just like totally fully hawkish. So we'll see what the Fed says next Wednesday. In regards to VIX expiration, we saw the market at major jumps. Seems to be a similar setup here as VIX expires. clear out all these puts in the 2025 range with the VIX currently just under 25. We think that VIX experience should drag the general vol complex lower. SIV drag is likely an equity tailwind. Interesting, Bill. Interesting. I'm gonna have to reread that after this meeting, but oh yeah, you got a picture here too. Yeah, interesting. Maybe a risk skew. An example: A trade 1000, B 600, C D. Well, it can't be a specific number like that. Is the problem, Jerry? But we'll figure something out. I mean, Redler's tier 1, 2, 3 is pretty good. But you still don't really know like the difference between those tiers, because tier 1 could be I'm risking $100, and tier 3 could be I'm risking 500, or tier 3 could be I'm risking 2,000 or something like that. So I'll think about it and try to come up with something a bit better. I've heard in the past that taking two sides is bad. Is that still true? Seemed like it was psychological. When you say taking two sides, can you explain what you mean by that? Because if you're talking about flipping, that's not bad. That's both good and really hard to do. So is that what you mean, like flipping? Or are you talking about like going like long SPY and short Qs, like pair trading? Yeah, so no, I don't think that's bad. It's hard to do, but, and I mean, I'm definitely not great at it for sure. And I should be, I want to get better at it. I should be better at it. But I mean, just think about it. Like, if you're long or short or whatever, and you have a stop, and your stop means that if this triggers, your idea is wrong, and you want to get out of the way because you want to avoid the further pain that is to come, doesn't that in essence mean that, you know, say like you're long and the stock's going down and you're getting stopped out of your long, that you want to avoid the further price going down action, right? So, like, if the price is going to keep going down, like, why not flip short? Now, in practice, it's a lot harder to do that. It's very hard psychologically to do that. And especially because you don't want to flip and then have it, like, retrace and then you get stopped again. Like, that's pretty hard, too. So maybe sometimes you got to flip, like, 2 or 3 times. So if you're newer, do not try to flip. Don't. It's hard psychologically, but you know, as you start to get a little bit more experience and you start to know when you start to like be able to like feel your risk skew in a way, like, you know, Derek likes to say, you know, new traders should only risk like, you know, whatever, $100 per trade. But then as you get more experience, you start to have different conviction in different types of trades and things like that. And I think that's when you can start to look at doing that. But I mean, again, it's just the concept. Like say you're long SPY over here, and you have a stop at the low of this consolidation. The consolidation breaks, and you get stopped out. Well, you know, it's nice to get stopped out and avoid this pain. But like, wouldn't you want to make some money on this pain as well, right? And I mean, I'm just saying that in hindsight. Again, I need to get better at it myself. And I think the big thing too is knowing the right out and having the right out for yourself. Whereas newer traders, not that they're like bad at finding the right out, it's just they're less experienced, so it's harder. They're just less experienced. They have less time, you know, looking at charts and figuring out levels and figuring out like where the real inflection points are. But, you know, as you start to get better at that and you start to feel more confident in yourself and in your own stops, then you can start to think about that. So I guess like ask yourself often, and then the trade ends up working, then you're probably not using the right out. Or do you get stopped out and then, you know, look back later in the day and say, man, like I had a good out. Like I got stopped and this thing just died all day. Like I had a good out. It was a good out. It was at the right point. So, I saved myself some pain. But if the market's moving, you can make money both ways. So, I don't know. I hope that helps a little bit, at least. My out was today high on the meta, the false breakout, but that area where I shorted was my zone of interest. So my exit was 5 minutes, was 5-minute close above today's high of day. Yeah, I mean, yesterday, I'll just say it again, that tail yesterday, there's just, if you're shorting because of this tail, there's no way that meta should be able to trade, take up all, reclaim all of this action, all of this selling action that caused this tail to come. There's no way that meta should be able to break that, and it did. So, I think you had the right out, and you got stopped out. But again, the market held support yesterday, right? Like meta tailed back down right into these moving averages into a upward curling 8-day. So same kind of concept here when I was just talking about flipping. Like that is a good out for your short. There is no way after that you see this tail, there's no way that meta should be able to take this tail out if this tail is indicative of lower prices. So when the tail gets taken out, you get, you stop yourself out, but it's almost like Max Payne in a way where everyone that shorted is getting squeezed, everyone that sold is out, so they have to buy it back in. It makes all the more probability for further upside. So not only could you possibly stop yourself out on this short, but you could possibly look to get long that as well. Based on that, again, you're thinking of the concept of there's no way this should happen. So if this does happen, then you probably see more follow through. And that's the same concept with like the V-bottom 5-minute patterns that I talk about that usually take like 20 to 30 minutes to occur, where like you get like this big red bar. Okay, you got a big red bar here. There's no way that this should be able to be taken out. This should, big red bar, this should bear flag and go down, or maybe bear wedge and go down, and instead it just goes up, 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 takes out the high. There's no way that high should be taken out. That V-bottom makes it that much better of a buy. Usually in these V-bottom plays, you get some follow-through, you get a test, kind of like a retest of equilibrium, where if you're being too tight on this stop, you buy through here, you get stopped out here, but, this holds just fine, and then you go. Mike asking Bill a question. Piton, huge moves today. Yeah, 9%. It was that just everything went up today, including shorts, which got squeezed, and that's why you saw this Mara up 36%. Continued after hours a little bit as well. Just a very bullish buying day overall. Everyone gets lucky sometimes. That's right. Looks like I got through everything. Anyone have any other questions? Did I miss anyone's question or anything? Otherwise, I will wrap it up. I just got a snap alert. I feel like that might be fake though. I don't even remember why I probably set this the other day and didn't mean to keep it. Snap's trading up after hours. I guess everything's trading up a little bit after hours though. Q's just almost got to 300 there. Alright, well yeah, looks like I'm through everything, so I'll be out for a few days. My apologies to everyone for leaving, but I'll be back next week. I'll be back for the Fed. I'll be back for Apple earnings. I'll be back for the big ones. So good luck to you all. I set Derek up well, so he should be taking care of you guys well. Today was a big day, but I honestly, if I were to give a week's prediction out, let's see what our weekly candle looks like. We got some room maybe to like 400 or so, but I would think these coming days before the Fed and before Apple are gonna be quieter. So hopefully I won't miss too much, but we'll see. I'll obviously be watching the market all day, every day, like I always do anyway. So good luck, everyone. See you in a couple days. Have a good night.